Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Wednesday, April 23rd. If there were four horsemen to haunt the consumer, they would likely manifest in a weakened job market, rising fuel costs, depreciated home values, and swooning stock portfolios. Such ominous trends weigh heavily on consumers' sense of wealth and keep them from spending. In turn, casual dining restaurants have been challenged to keep patrons from defecting. Further complicating the scenario for restaurateurs has been the rise in food and input costs. With such detrimental trends challenging the industry, it is no wonder the stocks of Yum! Brands and McDonald's have been held in check this year. Yet both companies have strong brands and an enviable international footprint. McDonald's announced strong results of its own yesterday, but managed to give investors pause by indicating same-store sales during March slipped. Meanwhile, Yum! Announced yesterday that first quarter system sales growth and same-store sales growth were positive across each division. In China, system sales growth increased 38%, or 28% when excluding the effects of currency. China's same-store sales grew 12%, up from 9% growth in the prior year. International system sales growth increased 15%, or 9% when excluding the effects of currency. International same-store sales growth was 5%, down from 7% growth in the prior year. U.S. same-store sales grew 3%, reversing last year's drop. Overall, sales increased roughly 8% year-over-year to $2.4 billion, which is roughly $60 million better than analysts' average sales estimate. Operating profits increased 34% year-over-year to $424 million, which lifted the company's operating margin more than 300 basis points to 17.6%. While management anticipates higher commodity costs will adversely impact margins, it remains committed to growing operating profits by 20% in its China division, 10% in its international division, and 5% in the U.S. The company also aims for earnings per share growth of at least 10%. For the quarter, Yum! Reported its adjusted earnings totaled 42 cents per share in the first quarter, up 20% year-over-year. The results were 2 cents better than the consensus earnings estimate of 40 cents per share. Despite challenging macro conditions and considerable consumer headwinds, management issued upside guidance for 2008. Specifically, the company expects adjusted earnings will total $1.87 per share this year, which is 1 penny more than the consensus earnings estimate. I'm Jeffrey Ham for Briefing.com, and thanks for listening.